This video is a prime example why on-chain analytics, so the data on the blockchain, is so useful. We are going to look at Daku, which is one of the major Pump.fun ecosystem meme coins. We're going to figure out where the price might be headed from here. What's currently causing this rally? So here's an overview of the Pump.fun ecosystem. The largest token is Fartcoin with 1.1 billion. Daku is already the fourth largest with 116 million in market cap. The price has almost doubled in the last 7 days alone, and the website looks inviting. It's a project that hunts down scammers, exposes corruption, and disrupts the system. So apparently it's not just a player versus player pump and dump scheme. There is something going on that might be beneficial for all of crypto. But let's look deeper. Here's something very surprising. On chain, we've got only roughly 1,000 holders. And again, this is the fourth largest Pump.fun ecosystem token. Interestingly enough though, we've got 6,591 subscribers in the Telegram channel. So Telegram, for whatever reason, has more than 6 times the subscribers compared to the number of holders on chain. Now that doesn't make too much sense, right? There's also a YouTube channel with 1,900 subscribers. So again, more than holders on chain. And it's not like the token is completely dominated by the centralized exchanges. A lot of the trading volume, relatively speaking, still happens on Radium, so directly on chain. At least according to CoinGecko. Now here's an overview of the trending tokens on Solana. Daku is not part of that list, despite the liquidity pool being already 1.2 million. So the size of liquidity would justify being in this list. Why is it not listed here? The reason is probably trading activity. There are only 63 wallets that interacted with the token in the last 24 hours, despite the massive price rally, despite the comparatively large market cap. And so all of those things don't really make sense, right? This is a project that's against scams, that's against fraud. But why do the numbers not match? Have a look at this. This is the number of new versus recurring traders per day. And this does not look natural whatsoever. We had 3 days where there were more than 1,000 wallets interacting with the token, and other days where it was single digit. If we just look at the recurring traders, it looks a bit more natural, but still, there are all of those apparent bot accounts that bought and sold the token in a single day. The number of token transactions also peaks on those 3 days. Now the trading volume is also massively volatile. We had some days with $200,000 worth of trading volume and other days where there was less than $100 of trading volume. But apparently most of the trading volume happens by small retail investors, so by wallets that have less than $1,000 worth of the token. Now here's the number of retail investors versus whale investors. So we just look at the minimum holding of tokens in a particular wallet and we count those wallets over time. And the number of wallets that have at least 1,000 tokens is now at 212. The number of wallets with 100,000 tokens, so around $10,000 worth of the token, that's now at 174. And the number of wallets that have $100,000 worth of the token, or 1 million tokens, that's now at 131 wallets. Now isn't that interesting to look at that ratio, right? $100,000 worth of the token versus just $1,000 worth of the token. Those numbers aren't that different. This is also not natural. 98.5% of the token supply is held by wallets that have at least $100,000 worth of the token. While the market cap is 115 million and it's the fourth largest Pump.fun ecosystem token, the trading volume was only 210k, much less compared to all the other Pump.fun ecosystem tokens. And so I don't have a crystal ball either, but this current rally in Daku is definitely not natural. And I believe it is a scam token. I don't think that this rally will last forever. I do think that at some point we will see a rug pull again. Now the reason why I say again is because we already got that rug pull once. On the 4th of January, the price went down by 99%. Could that happen again? Yes, very much so. I think it's better to stay away from things like this. I think it's a mistake to just look at the price chart. It's much more important to look at what's behind all of this. And this is all driven by just a few people that own all of the supply and that manipulate the price upwards. Now, crypto cannot make money out of thin air, right? For one person to make a 10x return, 9 other people on average have to lose everything. And so it is a winner takes most market. This is not just true on a trader basis, it's also true on an asset basis. As in, most assets tend to go down and a few assets outperform. What I found interesting is the different returns based on the centralized exchanges. So different centralized exchanges list different tokens, and the performance of the tokens that are listed on Binance, they tend to do worse than the rest. So here's the performance in the last week. Let's check the 1 month performance. Again, Binance performed the worst. Let's go to 1 year. And one more time, the Binance tokens tend to do not that well. And so my impression is that a lot of the returns that those centralized exchanges are making is not just from trading fees, it's not just from financing fees of perpetual futures, etc. It is also from getting allocation for various altcoin projects. So Binance might take a cut of the overall supply and then sell it off silently in the background, depressing the prices. And other centralized exchanges might do this less. So that's something to potentially consider if an asset is mainly traded on Binance and not on other exchanges. It's reasonable to be somewhat careful. Now, when the chances are so high that we pick a loser in this market, when most returns are just in a few assets, then does it make sense to simply just follow Bitcoin? In the end, Bitcoin's dominance continues to increase. So that's a measure of how much of cryptocurrency's market cap is currently in Bitcoin versus all the rest. And we tended to see this going down very quickly, very sharply when we were at around 70% Bitcoin dominance. So those crashes in Bitcoin dominance, this is altcoin season. But it looks like we are on our merry way up, and it looks like this could continue until the next year. Now it's fascinating to see this chart, because while the Bitcoin dominance went up, we saw how meme coin speculation, especially the Pump.fun ecosystem, grew a lot. Now, why did meme coin speculation become that popular? The reason is in this chart. This is DeFi Llama. So how much capital is in decentralized finance across all blockchains? And we had our DeFi summer in 2021 and then the collapse in 2022 where Terra Luna went bust. But it wasn't just Terra Luna, it was also Olympus DAO, which went from $1,000 to $20. It was Time Wonderland that went from $10,000 to 3 cents. There was Tomb Finance, which went from $3.50 to less than half a cent. Or how about this? Elephant Money, also just a straight destruction of capital. It became more and more clear that a lot of those decentralized finance protocols did not actually make 20-30% per annum. Instead, they were just Ponzi schemes in disguise. And so we had the DeFi Ponzi schemes, we had the vesting schedules and the insider selling of all kinds of altcoin projects. And so then meme coin speculation seemed to be the fair player versus player game. At least over there were no insiders that were selling additional supply. At least over there, we didn't have a clear Ponzi scheme. It was just tokens that were traded against one another. That's why meme coins took off that much. We can see that the market now has less risk than it used to have. So what we see here is, again, the decentralized finance total value locked. That's the blue line. But what we see in turquoise in the background, that's the stablecoin market cap. So now there's way more stablecoins compared to DeFi capital. In other words, the market is less levered, it is less risky, and it's likely not going to crash as a whole that soon. Still, trading meme coins is 100% player versus player. And since it's not just a game of luck, but also a game of skill, a game of on-chain analytics, or a game of figuring out who buys the right tokens early enough, who might have a following to attract attention, since it's still player versus player, some few players make all of the gains, they make the 10x gains, and 9 other players, they lose everything. Now there are actually some concrete numbers to this. Only 0.002% made more than $1 million with Pump.fun, only 0.05% made 100K, and only a bit under 0.5% made 10K with Pump.fun tokens. Now the average wallet size is of course much smaller than that, so there is a bit of dilution in those numbers, but it's clear that most people can't win in this game, right? This is a capital concentration process. And so naturally, after a while, when capital is in the hands of a few winners, the market tends to slow down. And And that is what we have seen, right? The peak in Pump.fun activity happened in January of this year. And so again, does this mean we should just stick with Bitcoin since Bitcoin's dominance is going up? Or does it make sense to potentially try to beat that market? Let's have a look at the largest Pump.fun ecosystem token, which is Fartcoin. It's got a size of more than 1 billion. With our wallet tracking, we got a signal that Kyle Chessy was buying Fartcoin at around 4 to 5 cents. Here is Kyle Chessy. He tends to make some very interesting trades. Not all of them, of course, work out. Not all of them become a Fartcoin, but he's definitely closer to this than closer to this bracket. And so this is what I believe is the secret in this market. It's trying to find out who are the winners and then also what kind of wallets do they hold. So here are the wallets that we have found using on-chain analytics just by Kyle Chessy. In total, we track more than 400 wallets and it's all in this influencer trade channel. And here's the proof. I made a video on Fartcoin when it was still at 5 cents. So I tried to publish videos still early on this channel. Of course, I don't talk about every single influencer trade here because the influencer trades are part of the premium community, which by the way is down below. It's thebitcoinstrader.com. So since that alert, Fartcoin went up by more than 4,000%. Then it came back down. Now it's recovering again, still since the alert, an increase of more than 2,000%. And so this is how the game works. I'm not even certain that Kyle Chessy is the one that found the token first. He might also follow other wallets. He might also be part of other communities that find those things early. And that's the reason why he might have bought. And so there are different strategies to outperform this market. Of course, we can try to find this 10-20x returns, but more often than not, those investments go to zero, right? We can have 3, 4, 5 failures. If one of them goes to 10x or 20x, that's fine. But it's pretty hard on risk management. A strategy that also works, especially when prices tend to go sideways, when money isn't flowing in as quickly, that's shorting altcoins that have just recently seen a rally. So I've made several videos on this as well. Check out the older videos on Dogecoin on this channel. So between November of last year and January of this year, I showed the exact same chart. This is not Dogecoin in US dollars, it's Dogecoin's dominance. How much of all of crypto is currently in Dogecoin? And it tends to be trading in somewhat of a range again. And the price goes up very quickly, maybe when Elon Musk talks about Doge, or maybe when there's another significant news event. But after that rally, the price tends to underperform. And we can make money from that underperformance. We're not even betting on the price itself going down. We can bet simply on Dogecoin underperforming the rest of the market. So we can bet, for example, long Bitcoin, short Doge. So in the end, we are not delta exposed. That means we are independent of where the general market is going because we have one asset that's long, one asset that's short. The overall macro doesn't matter too much. But then we are betting on the relative performance of Doge to Bitcoin. And when that goes down, we can make money as well. And I have made money with that short. There are plenty of very nice trades that our community has done. So over here are just a few of them. This has been shared by community members. And yes, not every trade works out like this. But if we have risk management in place, if we look at the overall trading ranges, because Dogecoin can't go above certain relative valuations to other cryptocurrencies, then we have positive expected value. So instead of trying to pick the few winners, an easier strategy is just to bet on most altcoins doing worse. And so that's then where a lot of those trades are coming from. I'm of course sharing my own trades as well. So this was the last trade that I've closed. This was a short on Trump. Trump relative to Solana was at a high and then subsequently it deflated, and then with the right leverage we can make some quite nice gains relatively quickly. And so this is all part of the premium membership. It's not just the Telegram chat, it's not just the trade signals of the influencers that we are following with those 400 wallets, it's also a whole platform with tutorial videos. So in case you've got some time, let's say during your lunch break, feel free to, instead of just scrolling Instagram, to go through the tutorial. So here are those tutorials. There are more than 100 in total. Feel free to just binge watch them. So it's currently $125 per month. There's also a 1-week money back guarantee, and you should see somewhere on the screen now a link to premium. Just click on that and feel free to check it out. So see you next time on YouTube, or see you in premium. Cheers.